Okay,
Thank you.
so okay, Thursday, 6th of October. All right. So Thursday, 6th of October. This is our setup. Okay. And let me convert to your time zone. UTC +8. Okay, from November 1st, okay, the time zone will shift, okay? All right. So the London Open will move 1 hour ahead. All right. And the New York Open will also move 1 hour ahead.
Okay.
Okay.
So it's at 2 p.m. is it?
Yes. No, 1 hour ahead means should be yours 4 p.m. Daylight saving. Okay. Hello. Are you there?
Yeah.
Okay, let's first. Okay, I will tell you about it in a while now, but let's first start with this setup. Okay, so overnight session start at 3 a.m. your time. Okay, so just write down OSS, which stands for overnight session. All right, so the second session would be okay, and we have a London Asian close. Okay, just mark this out as well. Asian close. All right, we just call it as AC, Asian close, and then we have London Open. London Open. All right. Okay, so we have marked these three things out. Now I have to find out the highest point here, which is this one here, the highest point. All right, before Asian close, the highest swing low. And
Wait. I think London Open is your time. I think you put
okay,
it your time.
sorry. Shit. 15.
14.
Okay, all right. So this one 3. All right. So this is the highest point, right? And this is probably the lowest point, right? So we mark the swing high from here, from starting from OS, extended all the way up to this point. If your line is like this, right, you can press shift and it will become straight. All right. Shift from your keyboard. If it's like this, right? I press shift, it will become straight. Sorry. Just press the mouse cursor then. So we have this one, right?
Yeah.
It's a very huge range today. Okay. All right. So we have marked this one, and this one should be overnight high, overnight low. Okay. Now what do we have else here? Okay. Now we have to determine the bias here. All right. So you just see the move here. Obviously, this was here. Once I see this move here, I see the huge volume here. Okay. This is the first thing I see. So this should be here, over here at this point, it's selling climax. Okay. And if we draw the structure from here before entering here, okay, joining from here to here. Yes, so we do have a selling climax here, right? So just marking down as selling climax plus oversold, okay? And this should be AR rally, right? I think this is what you did, right?
Yeah, correct.
All right. Okay, so we have
But
an
my
AR rally.
AR is a lot higher. Yeah.
Sorry,
My AR is up to the
this point.
uh yeah.
Yeah, you can make AR up to this point. But what I'm saying, this whole move is in AR, right? This is what I mean to say. And it's
Yeah.
also plus jump across the creek of this channel, okay? So right over here, you can see. All right. So here we have this, okay, this one. All right. And then from here, what do we notice here? The price just came down here and we have a significant volume here as well. Okay, you can see. All right. And this all volume is supported by this volume as well, right? Okay. And then we also have significant volume on the top as well, right over here. All right. So as we move
Yeah.
to the upside, what do you notice here? Okay. So let's start marking it. Okay. All right. So when we enter the range, okay, how would I mark the channel here?
Secondary test.
Hmm? Okay,
I
let me
understand.
first tell you. First, when we have this AR and JAC move, then we see this high volume at the top. Okay, so this is kind of redistribution going on over here. All right. Reaccumulation. All right. Okay. And then this reaccumulation makes the price to go up. It continues. All right. And then the price here, once the price is reaccumulated here, all right, what do we see here? The price just make a very huge volume over here, right? And then the price fell down and then make a lower high. Okay. And all of these characteristics are of what characteristics? So we start from here. Obviously, we have a bullish bias here. Let's suppose we have a bullish bias here. Okay. And how about at the top? Once we see the top here, okay, if I start to draw the channel here, is it possible to draw the channel or not? Just tell me about this. But what I see that the price is increasing with certain spread and certain volume, right? Coming up. And you can see increase in volume here as well. Okay. And then what do we see here? The price just, hidden up thrust, right? So let's mark it as, okay, at the top of the move, we mark it as buying climax because of the high volume, sudden acceleration and everything, okay? Then this would be, of course, AR, sorry, right? I'm talking about this range, which we are forming here. Okay, start marking it. And this would be the first one here, secondary test. All right. And what happens to the secondary test before it moves down here? What do I see here? The secondary test, we are making the lows here, right? What does this suggest you?
Price will start to move down.
Yeah. Okay, we are near the bullish bias here, right? We have the bullish bias here. All right. So the price, so we have a bullish implication right over here. Okay. All right. So it means the price will go on for a while. Okay. But the price may reject. But what I notice here after secondary test, so buying climax, automatic reaction, secondary test. So we have at the overnight high, we have what? Bearish. Okay. If you want to see a much more clear move here, go to the 5-minute time frame and refine the structure. It's very important. Okay. Now you see on a 5-minute time frame, what kind of move are we seeing here? The price just straight away went up. Very narrow range. Okay. And then what do we notice here? Of course, we have a very huge volume right over here. We have the huge volume here as well. Okay. Which signifies that there is a kind of selling climax here, right? All right. But here we have what? Buying climax, right?
Yep.
So we have buying climax. So we refine it on a 5-minute time frame. Now go back to the 15-minute time frame and see. All right. Now we have a buying climax here. Bearish bias. We have a buying climax here. We have what? What do we have here? Buying climax here and obviously overbought. All right. So we have a bearish bias right over here. So now, okay, the price is forming. Now, as the price is forming, I suggest you when you see the price is moving down and you can draw another channel like this, okay? Right? Because this was the first major high. This is the second, this is the first higher low, right? First lower high. So we can draw the channel from here because we see this channel, right? Now we can just make this like this. Okay. Now see here. So we have this channel here, right? And just after Asian close, what do we see here? What kind of option is this, right? We just went up. So let's go to the 3-minute time frame and let's see if we can find the entry. Okay. So here, what do we have here? All right. We are in what stage? Can you tell me?
Selling climax.
We are in selling climax, very huge volume to the downside, price reverses. Okay. The price test here. So obviously, all right. Just before London Open, we did what? Spring and then reversal, right? Okay. Spring and reversal to the upside. So yes, we can place a trade here, but London opens right over here, right? Now, remember one thing here. The London opens at it shows you 1457, right? If you see the time zone here, can you see the time here to the downside here? Time,
Yeah.
right? If I
Yeah.
mark this candle, this shows 1457. This 1457 is the opening time of this candle. So the closing time of this candle is 3, okay? 3 p.m. your time. So 3 p.m. All right. So this candle closes at 3 p.m. We have a spring here. We can take a trade by law, like by rule, like we can take a trades right over here, right? Here as well, we can also take the trade here as a bullish confirmation. Now you would say, oh, there's a huge one and it comes down. But the point is that what kind of implication we have right over here? Selling climb. And we have a bullish bias here at this side. Okay. This whole side is a bullish bias here. Okay. And now we have an oversold here, right? Mini oversold. So we have all the implication to take what? An up trade here. So placing a stop loss last low. This is last low. If I take my trade right over here, my last low would be this one, right? So I place my SL just below the last low, like this. All right. Just below the last low. So where should I place it? If you go to a trading view, okay, you will see, you will zoom out. Okay. You will see this is last low, just few pips below. Okay, for example, you can place 1 pip below the last low like this. Okay, and then you can extend it all the way up. Okay, and what I'm seeing here in the channel here, what should be my target? Okay, now what I have seen here, every time the price reacts to the channel, it came down. So this would be my ideal exit, right?
Yeah.
Understand?
Yeah.
Understand?
Okay.
Okay. Now what happens?
Yeah.
What happens as the price goes up to the channel here? As the price goes up to the channel here, okay, and we know that okay, we are forming consecutively, we are forming what? Lower highs over here, right? We are forming lower highs within this OH and OL range, right? We are forming lower highs. Okay, and now once we are forming the lower highs here, and you can see we have a buying climax plus oversold AR secondary test, and then this reaction to the downside. Yes, it is oversold of this channel, but if you talk about this range, this one is what? Falling through ice, right? Is it getting too complicated?
No.
I'm saying if you, okay, let me mark this channel like this one. I'm talking about this channel here, this one and this one, which we draw, buying climax and all those things at overnight high. Okay, this one and this one. Okay, so this one is exactly what did you notice here? The price just like the price broke through the AR, right? So
Yeah.
this one is obviously, this is what? Falling through ice,
Yeah.
right? FTI of this main channel, right? But again, if you draw this channel here, okay, then it is oversold of this one, right? So we just take a trade right away. But what I will see, where the bears are coming in the past, can you tell me? The bears are coming right at this channel, right at the top. So it means what happens here? You see the volume here. As you go up, we have what? What do we have here? declining volume, right? So yes, after this, the price just went up and then came down. So this becomes what? Now we can draw the line over here, right? Because this was the last high before channel. Because the price, why did I draw the line reference line over here? Because the price failed from here. If it was strong, okay, if it was strong, for example, here, do you see here? As the price came back and then the price went up. The price fails here. So that's why I drew the line from here. Right? Understand? So this is
Yeah.
the reference. In the same way, the price fails at this line. Why? Because if it was a strong, because if you see and compare this move here, this one, you see here, this one, the price just straight away broke through this channel. Okay. All right. The price just straight away broke through this channel. Okay. Without any doing this. But here, what happened here? What did you notice here? The price just went up, then suddenly reversed. And we are reversing on what? You can see the volume and these characters. We have a no demand kind of characteristics here, right? The price reversed here. Then we formed a reference line here. And then what do we see here? UT. Up through. Right? We have a UT here. Okay. Of course, this UT here. And we do not have a signal right over here. Do we have a signal right over here? No, we don't have, right? Any kind of F thrust no result or any kind of upthrust, hidden upthrust or something like that. We don't have. The upthrust is completion over here. Obviously, right over here at this point, this is our entry point. Can you see? Now we can enter right over here at 1551. We went short. This is test of upthrust, right? And where would we exit? Obviously, our exit would be, because we are breaking this channel, we are just over this channel, we broke the channel. So our major reference line, which is OL, would be here. Okay, right now we are following what? We are following what structure? We are not following this structure. We are following this main structure, right? Right?
Yeah.
Okay, so if
Right.
we are following this main structure, so our next target would be this one, right? OL. So yes, we extend it all the way to the OL. That's it. Finish. Got it? So if you are just talking about the immediate entry, which we have bullish here and we have a bearish here, right? The both way, right? And after this, once we broke the OL, then the bias is changed. Why the bias is changed right over here? I tell you the reason why the bias is changed. The bias is changed because of this one. Okay, now at this, we were expecting, because our major bias was bullish here, right? Our major bias was actually bullish right from here. You can see, right? This is our major bias at this extreme low, right? But all of this bias was changed actually, and the price kept on moving down, kept on moving down. Why does the price kept on moving down? Can you tell me? As I told you, the news can change everything. If you notice this news here, a very high impact news here, this changed the whole structure. Okay, the news can change your bias. All right, see here, another one. The news can change your bias. This news changed how the price fell down, and the price, because of this news, the price fell down. This one reacted, and you see how the price is reacting. Okay, the price fell down and then all the way down to this side, and then finally the price made what? This one. But as I told you, whenever we are going towards this one, okay, remember one thing. For example, if we are just looking for the bias, because this bias will be followed through what? London open time, right? New York open time. So we have taken this trade, right? So London open is clear to you or not?
Yeah. Clear.
Okay. So now what will happen towards this one? Okay, let me just close this one. The irrelevant lines here. I just make the basic one, okay? Okay, now we have this one. Now, where is the New York open? Can you tell me?
20.
Okay. This side, right? Okay. Now, what do I notice? Can I draw the structure as if I want to draw the structure like over here, right? Just draw the structure because now we have, first of all, we joined this one, right? But now this stage has passed, so we have to draw the most major swing points. Do you, okay, so do you understand that? All right. So what do we have here? Okay. So we have the price just went down. We don't have now. Can we consider this as selling climax? We cannot consider this as selling climax because there is no huge increase in volume. There is no huge increase in spread. This is not even a selling climax, right? So what does this suggest me? That I have to redraw my structure. Okay, now my this one is done. Okay, this one is done. Now I can join this one and this one. This one. But again, I don't have any kind of a structure here. Right?
Yeah, correct.
Right. So obviously, okay, the price, I don't have any fixed kind of structure here. Yes, if I just draw these two lines, then there will be a structure here, SOT, and you can see how how at the third touch point, the price reacted here and then finally shoot it up, right? But at this point, I don't have this kind of structure, okay? All right, what do I see here? That the price just, like the price fell through this one. Now consider this as a range now, okay? As I told you, once we have this kind of thing and we have broken down and we are going down here, so obviously this move is what? What this move is? After OL.
Falling through ice.
Sorry, okay? Falling through ice. Now you compare,
Yes.
now the previous London session is gone. Now we just keep the major one. What is the major one? We keep this one here. First of all, OL and OH, okay? We keep this structure and we keep this major, this structure. All other like small structure should be removed, all right? So what do we have here? Obviously, we have this one here, high. What kind of things you are noticing here? The price is making higher highs, higher lows, right? And then the price finally broke through it, right? So this becomes what? And you see when the price breaks through it, we see increase in volume as well and everything. So this becomes FTI, right? This whole move. Falling through ice. Any confusion here? Okay,
No.
after falling through ice, what do we notice here? When the price is ranging here, the price did not make a range here. It's just price just fell down, tested it, and then came down. And now here the price again fell down after testing. Okay, the price is doing what? A range here, right? Now this range is what? After falling through ice, what do we have?
Redistribution.
Redistribution. Okay. All right. So let's go to 3-minute time frame now. Okay. So we have redistribution here. Okay. Once we have the redistribution here. Okay, now you are here. Can you take your trade right over here? No, you cannot take your trade right over here, right?
Yeah.
The price is just rising. We have a micro, reaccumulation because the price, we want what, right? We want the price to, we want an entry point. Either we want, VCP pattern, but in this case, what are we seeing here? Okay, the price goes up to the upside. The New York opens right over here, right? So what do we see here? Okay, we wait for the price to come back and retest this level. And what do we have here? At 836, we just fell down, right? From here, up thrust, right? So when we have an upthrust here, this is a very clear signal to go short. Okay. 2.05 trade. Got it?
Yeah. Okay.
Okay, because we have a falling through ice. But my question is, what would you do when you see this London Open? Now, how do you see London Open? That's a problem. Okay, now see the microstructure, the previous microstructure. This is the macro structure, the major structure. This is the minor structure, which okay, what is the minor structure? The minor structure is a structure that occurs within the major structure. For example, this one. Got it? Now, if you draw this like this, and if you have this kind of what do we have here? Okay, so we have this kind of minor oversold, and then the price reversed, right? And then the price reversed and broke through it, right? And of course, after price breaks through this structure, this channel, okay, we know our next target is this one, right? So what do we have here? Now, we just draw the structure, okay, swing high, this because this was swing high, and this was swing low, okay? The price does what? The price made a spring, but the point is that the spring is already on a very high volume. You can take your trade right over here, and you can also wait for the test. So you can either enter right over here, or you can enter right over here on the test of this one. No supply test. Got it? Okay. This is a mage. If we have, because if this is one, if this one is this one, this is the last low, right? The last low is which one? The last low is this one, right? This is last low. So this low is already less than, is actually more below than the last low, right? So we can place a stop loss directly over here. All right. For example, if we are taking this kind of trade, if we are taking this one, okay, this one here, our last low would be this one. So this would be a stop loss. But if we are taking right over here, this trade, okay, this is our last low. And this low over here is already lower than the last low. So we can place a stop loss right over here. Understand? But if you place right over here, just at this point, you will get stopped out. Okay, this is a major problem. Now, if you see the last low right over here, the last low right over here was from here. Okay, this is a one major last low. Now, the point is, where should you place a stop loss? This is a major problem once you take this kind of trade in a very narrow range. Okay, so my advice is just place a stop loss below here, right? Okay, the last low. Now, the last major low after this one was this one, right? So if the stop loss is too huge, what you can do the half the distance of this one and this one, and take it a half distance. Got it? For example, this one and this one, and you put my stop loss right over here, half distance. Got it? And then place it all the way up there to 2R. Got it?
Okay.
Do you? Okay. Because if I place right over here, the SL would be too huge. Last one. Right, SL will be too huge. So I will not get 1.37. So this is a technique you can use, or you can wait for the retest of this one. Okay. And I also told you, you can also go to the 1 minute time frame. If the channel is very narrow, you can go to the 1 minute time frame and just see. See here, it's too huge. So we would wait for the price to retest this region. Got it? This would give us much more better trades. Okay. So this is what you have to decide. What would be your optimal trade entry right over here. Okay. So we just trade, for example, right? Okay, this is our major entry point here. All right. And we have an increased volume, you can see. All right. So we can just place a trade right over here. And the stop loss would be, if you place too quickly here, you will get hurt. Okay. So I just suggest just play And if you're not confident whether to place this trade, where to place, okay, then what you can do in this situation, okay, you can place much more par, and rather than this one, you can take 1.5 hour trade or 1.6 hour trade. Got it? This is also better in this situation. And once you get a re-entry opportunity right over here, that's like, for example, here, okay. Now the problem with this one is because this is key reversal, right? But it's also rejecting here. Can you see? There's a difference between this bar and this bar. Can you see the difference?
Yeah.
Right? So this is also rejecting and it's closing below this level. So it means that there will be some sellers coming over here as well. So this level will be retested. Okay, this is how we make sure how when would the level be retested. For example, you compare this bar, very strong bar to the upside, very strong bar to the upside. All right. So what happens here? The price came back and retested. Now you see here. Okay. Let me show you. Okay. Anyways, did you understand the concept? What I'm trying to say? Okay. When we draw
Yeah.
this reference line, the price is also rejecting this area, right? Okay. And this area is obviously also rejected. So in this case, what happened? We will wait for the retest because the price is also rejecting. Obviously, we know our major bias is bullish now because of this channel, right? Very okay. And now once we enter right over here on the retest here, we can enter right over here or you can enter right over here. Now, obviously, placing the stop loss is not a problem here, right? You can easily get 3.7 now. Got it? And now, as I told you, this is FTI and this is what? Okay, falling through ice, and this is what?
Redistribution.
Hmm?
Redistribution.
Redistribution. Of course, this is redistribution because of FTI, the major structure. I'm not talking about the minor structure. Now, with the major structure, if I can draw the line, I would draw, okay? Because this is first higher low, okay? And then I will see, this will give me much more accurate entry point. Now, what do I see here? The price just went up, and then finally reversed from here. This was because the price kept on going up on a very huge volume. And this is the first reversal when we got the bearish candle, right? And we are also what? Rejecting this high of this one, right? This reference line. And now we got what? If we draw us a little bit here, up thrust here. So this is our first entry point, or if you want to wait for the price to close below this, you can also enter right over here. Okay. And then, of course, I told you if this is redistribution, okay, you see, when we have a major redistribution, okay, which price will have more effect? This price, you exit right over here. This price will keep on falling down. Can you see? Because the major structure was a redistribution structure. Understand?
Yeah.
Okay. So what is the tip here? How do you trade the New York session? Okay, we just see how the price is reacting. We just remove everything. Okay, we remove everything and draw what? OH and OL lines. Okay. Okay, we keep the structure and we see.
Bro, give me 1 minute. Sorry. Give me 1 minute.
Yeah, okay.
Hello, sorry about that.
Okay, okay. Do you understand what I'm trying to say?
Yeah.
Okay, so I will summarize at the end of the video, okay, in the next webinar, okay, and that how to trade the New York session, okay. So for the New York session, you remove every structure and you just focus on what's happening during the overnight session and what's happening during the London session and draw the structure, okay. If you just extend it like this, right, it will confuse you, all right. So I will tell you what happens, okay. So let's suppose now if you remove it and just go to the 15-minute time frame. Let's draw again for the New York session. Sorry. Okay, it will close now. So should I restart again this webinar because I will get enough time to. Okay.
Yeah.
Okay. Okay.
Can.